So we will start with the presentation. First of all, again, for people who don't know me, I'm Petar.jacimovic. I trade Forex about 8 years. And I trade right now for company. I'm an official analyst of Forex for about 5 years. I trade with large investors, doing the managing accounts. Also, I have a mentorship program, my mentor. I have the 7 days course, and we'll speak about that later on. So that's little information about me. I work for FX Street, for Forex Trading TV as well. I'm a member of Forex Factory on all largest forums, veteran member there. And that's a little about me. And now we'll start with presentation. Later on, we will go to the MT4 platform, and we will go to the pairs and see how we combine fundamental technical. We'll not speak too much details about fundamentals here. That's pretty much what we covered on the mentorship program, but we will go to the point so you will understand the importance and some critical points about fundamental aspect in intermarket relation. So we'll start with presentation right now. And we go. So again, my Skype username is petar.jacimovic. Hello, Marco. Yeah, enjoy webinar. So this is my Skype username for everyone who wants to add me and speak with me. I also plan to open the Skype room later on for for traders, where we will stay in touch every day, So you can add me there and we can speak later on. So let's start with the importance of fundamental analysis together with technical analysis. This is a very critical point if we speak about professional trading. Like everyone else, pretty much, I started 8 years ago when I started trading Forex. I started to go and search, pretty much, went to almost all forums, search the strategies, saw also some techniques on the internet, try to find some, let's call them, holy grail, thinking that everything, can be in front of you, you just need a good technique, and your results will be very good, and stuff like that. So I searched like 2 years, my first 2 years, pretty much I tried everything, like everyone else who's starting this business, and I saw that results are, very, very not so good, not consistent. There is some up and downs, but you cannot have some consistent curve in the trading, and from that point I really went to, to visit one institutional trader, pretty much, who traded, for the bank, and he explained me an example that was about 5 years ago, and he explained me that, and he said that I have the very strong technical knowledge about the technical analysis, but that I lack a lot of fundamental analysis, and I didn't want, I watched seriously what he's doing day by day, and I recognized, and he explained me that actually everything you see on the chart, it's reflection of some of the fundamentals, some of the interbank relations on the market. Yeah, Marco. Yeah, we'll see later on. Just I need to continue with the presentation. So, it was absolutely amazing when I started to see the real correlation between the intermarket, between the stocks, between the commodities, gold, between the oil, a lot of stuffs, GDP price index, for example, for New Zealand, and so on and so on. You have options, for example, how options affect on the FX, also the futures market, which is very, very big, and all these markets, had the influence on later on what you will see on the chart, because basically again, as I wrote here, trading only using technical analysis, it's absolutely like driving a car without wheel. And believe me that, so I'm in professional field for about 3 years. I started to work with large investors, with also small, 20, 50K, 100K. But the point is, without fundamental knowledge, you will absolutely be just like you drive a car without wheel. It's almost impossible. The maximum you can do using the technical analysis, it's to establish some very, you can't be profitable trading just technical analysis, pure without knowledge of intermarket relation and on the fundamental, but that your success compared to the success of professional trader, or success, for example, to my success, the consistent results and very, very controlled risk and still good earning over the year, over month by month, it's absolutely, the win ratio will have, the consistency, it's absolutely ridiculous, in your favor if you understand fundamental analysis and intermarket relation and how intermarket relation affect actually the currencies, which we'll speak today. So as I wrote here, it's absolutely absurd to trade just according to technical analysis, simply because what drives the market and the price fluctuation actually coming from fundamental aspect. And as you know, everything is created by supply demand, like a general, like a key law in any financial market. The key law is supply and demand. The more demand, you will see the upward, the more supply you will see downward. So, but what actually drives the market, what creates that demand or supply, it's basically fundamental aspect. So you must always know that, because again, the big boys, let's call them on that way, the banks, which are the largest participants, let's say the most important on the FX market, they will trade and they will trigger and they will start to buy, create demand, just if they see the certain conditions fundamental they like. If there is no conditions, generally, fundamentally the economy, the global view is not good for demand of some currency, there will not be demand for that currency. From the other side, it can be a supply for that currency. So it's, so for example, what is the most important thing in the trading Forex is basically to trade strongest currency versus the weakest currency. You always need to find that. You don't need to trade two weak currencies or two strong currencies, because it's too risky. And the key thing you trade Forex in any instrument is to find the strongest versus the weakest. Okay, so you always need to find that. And again, the key fundamental principle, the idea behind the fundamental analysis is that if a country's current of future economic picture is strong, their currency should strengthen. A strong economy attracts foreign investment and businesses, and this means foreigners must purchase a country currency to invest or start a business there. So essentially, it's all down to supply and demand. A country with a strong and growing economy will experience a stronger demand for their currency, which will work to lessen supply and drive up the value of the currency. And this is a key principle if we speak about fundamental view. So you must always know this and have in mind. So we'll go to the next slide. Again, we'll go very fast. What's the key economic releases and key drivers if we speak about FX fundamental view? It's absolutely the first place you must take very big care and understand the interest rates. So interest rates are main driver in Forex market. You must know that. And all of above mentioned, actually all the things I will mention later on will be close watched by a federal open market committee in in order to gauge the overall health of the economy, the Fed can use the tools as a disposal to lower rates or lower rates, leave the interest rates unchanged, or depending on what they see of their economic growth. So all the indicators you see, for example, in the Forex factory, all the high impact news, all the high impact events, directly decide the interest rate decision. So why we have everything, why we have the gross GDP, why we have the CPI, why we have the PPI, why we have the unemployment measures, employment, unemployment, non-farm payrolls, and all this make the final decision to the central bank to decide, do they keep the rates unchanged, they raise the rates, interest rates, or they hike again, or they cut the rate. So this is very important, because the basic nature is, if some country hike the rate, currency strengthen. If they hike the rate, they increase the rate. If they cut the rate, that currency should be weakening compared to others. But this is a general rule. Again, it's a general rule. Depend how big is interest rate, depend how much they hiked or they cut. If it's 25 base points or is 50 base points, so it's very important to understand that part, because again, this is a business cycle. In the economy and in the Forex, in anything in the financial markets, there is a business cycles. We're going from one interest rate decision to the next interest rate decision to the next interest rate decision, month by month, every month. Okay, we see what the central bank are doing, because you must know that everything you see on the chart, the supply, demand, everything is absolutely, the biggest players on the FX are absolutely banks. And banks directly, central banks, give the signals to investors and to speculators. Actually, they give the positive, how to say that? It's, for example, we have the EURUSD, which we'll speak later on, and we have, for example, the quantitative easing program started, for example, in January 2015 and established in March 2015. And when you have that quantitative easing program, which directly affect the FX market with 60 billion a month, absolutely, and the ECB, the Central Euro Bank, didn't like the Euro USD, the rate at that moment, and they did everything. They purchased assets, and everything just to lower the rate on the market to establish the weak euro. They did a quantitative easing program, 60 billion a month. They gave the very, very strong signal to every investor pretty much, and every speculator, that it's absolutely free to sell, and trade versus the euro. And on that way, they push even euro lower, because the Europe Central Bank and the Europe like lower rate Euro USD, because of they need to back the economy healthy and the strong euro at that time. And right now, even they don't like the euro. So again, euro fundamental view, the mid-long-term fundamental view is absolutely bearish on the USD. So absolutely till end of the quantitative easing program, you will not see any larger corrective phase on the USD. You can only see, smaller corrections, and then continuation of the selling. But some larger upward, or even someone say that it can be a reversal or stuff like that, you will not see, because absolutely you cannot trade and fight 60 billion a month from ECB. It's a just question of time when the USD will drop below 1, and when the dollar will become stronger. I mean, dollar is very, very strong. It's healthy. They hike the rate. They plan to hike few times this year rate. So this will be absolutely pushing the USD lower later on, in the next months, on the short midterm, it's a very, very strong downward. But we will speak that later on. I want to go just over. So again, the key point here is the interest rates is key main driver in the Forex market. If we speak about the economic events, about the key economic events, the interest rates, and everything else like consumer price index CPI, which is the most widely used to measure of inflation. You have the producer price index, PPI. These PPI and CPI are two most important events, to measure inflation. You have also the GDP, which is the second most important event after the interest rates. And the GDP is most important of all economic indicators. It's the biggest measure of the overall state of the economy. So this is actually the GDP is the health of the economy, So we also have the employment indicators. We have employment announced occurs the first Friday of every month. This announcement includes the unemployment rate, which percentage of the workforce that is unemployed, the number of new jobs created, the average hours worked per week, and average hourly earnings. And this report often results in significant market movement. You will often hear traders and analysts talking about non-farm payrolls. This means non-farm employment rate report, and it is perhaps the one report each month that has the greatest power to move the market. So you need to watch closely this. We have also durable goods orders. We have the retail sale index, measures goods sold within the retail industry from large chains to smaller local stores. Housing data includes the number of new homes that the country began building that month. So this, we went just fast to see the key events, key economic and high impact events and measures to final interest rate, which is the key actually driver on the Forex market. And actually every professional trader, including me, we absolutely watch the interest rates from the interest rate to interest rate dates. I know absolutely interest rate date for every country, when it will happen. You don't want to trade. Again, the key point in the currencies is actually to find the strongest currency versus the weakest currency at that moment, which means the strongest economy versus the weakest economy, and you want to benefit of that. That's the whole point. If you have the few strong economies and versus the few bad economies, you can trade different currency pairs and so on and so on. So we'll cover that later on. But again, what is important to remember in the previous slides is that interest rates is key driver to FX market, and you must know that the banks are largest participants on the FX market. And when the banks have the measures that directly pretty much they call the investors on their side when they start their measures, like key program, which we have in the Japan, for example, and the Europe right now, because again, it's all fundamental. And the drop on the euro, it's not just because of that. It's not just because you saw some technical indicator became red on the chart. It's not because of that. You must know that price on the chart is a reflection of fundamental view. It's always like that. You must know that. That's the most important to remember. And now I want to speak and go to the key points of the intermarket analysis. I speak like this, and I started with fundamental view and to tell you the importance of the fundamental view, because everyone else and everyone you see on the old websites and everything, or you see the old technical, one type of technical analysis, by the way. So it doesn't matter what you trade. Do you trade Elliott wave theory? Do you trade the patterns? Do you trade the harmonic trading, which I see a lot on, for example, the trading view. It doesn't matter if you trade, it doesn't matter what you trade, if you use the moving average to trade, if you trade the standard formations, like head and shoulders, you know, like flags and so on, or if you trade, for example, candles, only candles support resistance and stuff like that. The point is, without fundamental view and without knowledge of the fundamental aspect, you can absolutely forget about technical analysis, you know, because in professional world, you know, and there is no, even, I will just tell you this, if I don't see the good conditions, for example, for one currency, I just delete that currency for that month until the interest rate decision or until something happened with their economy, or, you know, if it's something flat or it's not good to trade, you know, you just delete that currency in your, you know, you don't even watch the chart. That's my point, you know. So you don't need even to, because for me to open a chart and do the analysis, the technical analysis for some currency pair, I must first see the good conditions to even create the analysis for that currency pair, you know. For example, if I see that country like Switzerland, for example, and Swiss franc, it's not good right now, you know. It's a very flat. There is nothing good in the. There is a much better currencies to trade on, so I just delete that. And not just that, there is a, every month you delete some currencies, you pay attention on the other currencies which have the good economy, and you find the bad economy, and that's the key point. You know, you're using the intermarket analysis. You know, you must know the colorations between. I will go very basic colorations later on, because again, the deep explanation, it's part of the mentorship program. But you must know the key points, and that's why I want to explain this. Again, we start with the intermarket analysis. Intermarket analysis is a branch of the technical analysis, but that examines the colorations between four major asset classes: stocks, bonds, commodities, and currencies, including the options and futures. So option market and futures market, which is very big and have the big influence directly to the currency market. Okay, what this means for us traders, investors, is that it is no longer possible to study any financial market in isolation. So pay attention on this, guys, because whether it's the USD stock market or gold futures, stock traders have to watch the bond market, because bonds and stocks going in the same way, they have the positive coloration. And usually the bonds actually going first and stocks are lagging. So they lead, bonds lead the stock, you know. But bonds traders have to watch the commodity markets, and everyone has to watch the US dollar, you know. Then there is the Japanese stock market to consider. So who needs intermarket analysis? And I guess it's just about everyone. Since all sectors are influenced in some way, it stands to reason that anyone interested in any of the financial markets should benefit in some way from knowledge of how intermarket relations work. So for example, we have the bonds and stocks going in the same direction. We're going the commodities and dollar going the negative coloration. So when commodities are weak, that means dollar is strong. When commodities is strong, that means the dollar is weak. So that is also good coloration, because they lead each other. They lead each other. Intermarket analysis, again, it's a step in another direction. It uses information in the related markets in much the same way that traditional technical indicators have been employed. Okay, so it's very important to understand, you know, this is critical, that you must, technical analysis is technical. What drives what creates that supply demand that you later see on the chart is actually from fundamental aspect, and from intermarket relation directly influence the supply demand, which later on reflecting on the chart. Okay. So markets provide us an enormous amount of information. If we speak about the trading professional, it's all about the information and how to use this information in your favor. You know, the key point, we live in the 21st century, and this is a century of the informations. Everything is available, you know, and everything is absolutely public. You know, you have absolute interest rate decision. You have exactly time when it's scheduled. It's absolutely ridiculous. You know, if we don't have that, it will be very hard to trade, and there will not be professionals here on the Forex. Why? Because if you don't know the schedule of the big events, you know, you cannot trade, and you cannot weigh that and trade from one to second, from second to third event and stuff like that. You know, imagine if we don't have the exact timing of the events, you know, of the GDP, of the interest rate decision and so on. Imagine if it's not public, it will be absolutely impossible to create any, in the professional world, it will be impossible to create the result, you know, because you don't have any timing, you know, you don't have anything. Now everything is absolutely public, you know, the press conference you can watch public, the speeches you can watch public, you know, everything, auctions in New Zealand, for example, which is today, everything, you know, it's absolutely public. So you have the set of informations, you know, you just need to, it's like pieces of the puzzle. You just take the pieces of the puzzle and then create, you know, finish that puzzle. And now you have the, when you have that knowledge, you can just go, for example, the technical chart and do the analysis there, and you have much better confidence in trading, and you have the much big win, let's say, in your which push you, you know, into success, because you know what drives the market and you read. Of course, you will not read always good, but that will come with experience and so on, you know, to read and to see the quality of information, get for you, and use that information and trigger the setup technically, because again, without technical analysis, you also cannot be successful. So it's like 50% is fundamental, 50 is absolutely technical. Why? Because, okay, even if you have the information, let's say that you're fundamental analyst only, and you don't have the chart, you don't know where to position yourself, when is the good timing to enter, where you will secure your position, where is your stop loss, and what target you expect from that setup or position. Without the technical analysis, you cannot see that. So they are absolutely together. Fundamental is 50% influence in the professional world, 50% is technical. You must know very good both of them, you know, and use that knowledge and create the quality position. That's the key thing, you know, and later on made a profit, which everyone wants, you know. Okay, but again, we will go on the very soon on the charts, and we'll see on the charts combining technical and fundamental view. And I will use just basic to see here what represented here, so to see how much is important to understand this. Okay, let's back to the PowerPoint presentation. So again, market provides us enormous amount of information. We spoke about information. Bonds tell us which way interest rates are heading, a trend that influences stocks prices. Commodity prices tell us which way inflation is headed, which influences bond price and interest rates. The US dollar larger determines the inflation environment and influences which way commodities trend. You know, the equity markets often provide valuable clues to the type of environment to the US market is a part of. The job of the technical trader is to sniff out clues wherever they may lie. If they lie in another market, so be it. As long as the price movements can be studied on the price chart, and as long it can be demonstrated that they have an impact on another, why not take whatever useful information the markets are offering us? Technical analysis is the study of the market action, but no one ever said that we had to limit that study that only the market or markets we are trading. And this is the key thing. I took this sentence from the John Murphy, which is Intermarket analysis, by the way. So I use just because he explained very good. What's the point? Point is, every market is correlated. Some markets start first, some markets lagging later on, then later on some markets starting first, later on lagging, but they're all correlated. That intermarket analysis is absolutely unbelievable when you understand, together with understanding to the events on the FX, like we spoke, like GDP, interest rates, and so on, employment, unemployment, So if you know that fundamental part and you know the intermarket analysis, you pretty much covered everything fundamentally, and then you go to the technical analysis and do the work. So right now we will start to we will start the chart. So I just wanted to put you the basics, okay, to understand what drives the market, who are the key drivers, what is the intermarket analysis. It's a very, very serious thing. So I will not tell you, it's not an easy job, guys. So you need, for example, every day, I wake up, 8:30. I check the informations I get. I see what the Asia session did. I see the news from the Asia sessions, Then I observe what we have on the channel today of some high impact news which we spoke about, which I told you, for example, if we have the employment, unemployment, CPI, what we have GDP, So I see for what country we have that. I see the shell of the interest rate decisions for the key countries, the FX for major countries, And after I saw that, that's just one part. Then you need to go other thing. You need to see how the indexes on the stocks perform in the Asia, since we have there Japan, we have the China. So we have the Shanghai index, for example, which is a key index in the China. We have the Nikkei index in the Japan. How the stocks are correlated with the Japanese yen, for example, they have absolutely the same direction. If the Nikkei is dropping, the yen strength, So the USD going lower if the Nikkei is going lower. If the Nikkei is going higher, from the other side, USD going higher and yen weakening. So for example, I just want to give them one example. So you need to check the stocks, you need to do analysis to the indexes to see how much room we have to go upward, downward, or where we are, or we are maybe flat, or Then when you did that, you need to start the Europe session and see the Europe indexes, like FTSE, like DAX, like Euro stocks, So the key index is there to see how we perform there, and do the analysis in the indexes. And then if you know indexes in the Europe, you know about the euro, like a currency for that day, you know what to expect, and so on and so on. And that's that intermarket correlation, And what else? There is a lot of things. Again, it's a serious business. You have the options expirations, which also have the very, very strong impact, because every day we have some very, very strong options expiration on some levels. On certain currencies, depend of the day. Every day is different. So there you have the options expirations date. For example, today on the New Zealand dollar, US dollar, as I read before I opened the room, we have about 2.4 billions on the New Zealand dollar expiration date. So they need to fill that strike price. Where is that options expiration date, and so on and so on. So, and then not just that, when you check all this, you need to see the futures market, you know, for example, Euro USD, but futures market, which is also very, very big and have this very strong influence on the FX, you know. And then when you did all this, you know, you going step by step and see whole picture, then you can see real FX chart and open chart like this and start analyzing. Okay, so I tell you, it's not an easy job. You need to have big knowledge and understanding of the intermarket relation. You need to understand about what's the monetary policy measures, how they affect on the currencies, what is coloration, is it positive or negative coloration, how the indexes affect on the currencies. And when you know all this, then you can actually do what you're doing. Most of you, actually 90% you're doing right now on daily bit. Okay, because 90% of retail traders, you know, doing the same thing over and over. You know, they have some chart, they learn some, read some book, read some site, it doesn't matter. They saw some technical technique, you know, it's just one type of technical analytics in the market, you know, and they stick to that and they think they know everything, you know, they wait, set out everything, you know, and later on what they see over a month, over a year, they have no consistent result, they lack knowledge, you know, and that's the reason why after all the 90% of the traders are losing. Why? Because of the lack of knowledge. Lack of knowledge is a big problem for retail traders. What actually make the difference, and what is a big difference between the professional and the retail trader, the average retail trader, is basically in the knowledge, you know, in the experience, in the knowledge. You know, if you don't have proper knowledge, you can work on something and think that's good, and you can work for years, lose time and money, but you don't have the right information to trade on and right information to focus on to understand what is actually a reflection of the market and why is something happening. You know, you cannot blindly just watch, see, and trade buy or sell. You know, this is not gambling. This is a gambling if you treat on that way. You know, it's only gambling because lack of knowledge. And when someone say this is a gambling, it's because they got lack of knowledge. You know, if you ask me or any professional manager, trader, they will tell you Forex in any financial market is most serious business in the world. And it is. You know, it's the largest business in the world. There is no largest business, and you need to treat them that way, you know, and you need to always learn new right information, you know, stick to the right information and understand, you know, and go and practice and having experience, and you know, and on that way you can just going upward like a trader. Okay, so I will just go to the USD. This is a chart of Euro USD. I will take a pen here and I will focus to pay attention on this upward movement, because it was a very significant upward movement. When that happened and why that happened. So it's not like that. It's just because the price went here, you find some technical, you know, you have some trend line and price go higher. No, it's not because of that. I will explain the million situation when this went lower, you know. So you must know that every pattern. Let's say that way. Let's say this way. This pattern, this is a head and shoulders, you know. This is a neckline, and in the general basic, head and shoulders is very strong. Don't get me wrong. It's a strong pattern, but you must know when to use that. You know, I will show you the millions of examples when the head and shoulders didn't work, and I will also show you a lot of examples when the head and shoulders worked a lot. What makes the difference? It's fundamental. You must know that. If you don't know fundamental view, you know, you will be absolutely deleted, you know, and you will be absolutely catched by on guard. You will be off guard, and market will just punish you for your knowledge, because you don't have proper knowledge. They will just punish you, you know, because you're like rest of like 90% of the traders, you know. They trade blindly. They don't have absolutely very, very basic knowledge, you know. So for example, this is a head and shoulder formation, and head and shoulder formation actually came after the very significant upward movement, you know. But why this breakout of the neckline, let's say this is a neckline, why price went higher, and it's also fighting right now versus this supply trend line, and not right now this acting like support? Why? Because fundamental view at this stage, it's not good, and I don't have position. Actually, I sold here. If you watch my if you follow my thread on the Forex Factor, you see I sold around this stage here with stop loss on this stage. I took profit here. This was a 61.8 Fibonacci retracement, and it's also expansion 100% Fibonacci from this ABC here. And I scale out here, but I exited, and I don't have any positions for a days on the USD because it's not good to trade right now, this currency at all. Compared to USD, it's not good at all. Why? Reason is, you can find in, for example, the key reason is the stock, the DAX and FTSE are going lower, and if they're going lower, that means that they hedge due to the nature, and we are in the key program and we are in inverse relationship. So when the stocks are going lower and indexes are going lower, euro will find very hard time to become weak against USD. Because what's the point of the quantitative easing program? It's actually that they need to recover the economy, which means that euro, the good indication of the key program is when the stocks and indexes are going higher, which means that economy is starting to recover. You know, if the still economy is going lower, you know, due to inverse again relationship and correlation, the USD will find very hard time to do any larger push compared to USD lower, you know. So what that means actually, that means that we need a Europe indexes, stocks like DAX, FTSE and Euro stocks to go significantly to recover, and then we will see the USD starting to go lower. Also, that's just one thing. The second thing is futures market, which we have also problems there, and we have not enough supply to move this, to move the USD lower. And third thing as well, there is a interest rate decision. I think it's about 2 days. In 2 days, there is an interest rate decision. So everyone awaiting this interest rate decision, and probably will not see any larger movement. Probably price will sideways or retest swing high, or even go like, you know, until that interest rate decision, which is this week for Europe Central Bank. So you don't want to trade that, because everyone awaiting that, and also the Europe stocks are not so good, you know, the futures are not so good to establish the selling positions. From other side to buy, it's more chances that we go a little bit higher before we see some selling, since we know we are in QE program, and fundamentally, you know, it's a strong downward pressure. But right now, it's not good time. We need to see how market effect after interest rate decision. We need to see the stocks trying to push some higher and start to recover, and then that will be the good time in good conditions to build technically on USD setup. Okay. Again, if you have any questions, feel free to write right now, since, you know, I can. I covered the PowerPoint presentation, so you can write absolutely everything you're interested. So again, you see the head and shoulders didn't work. you know, and again, back into this massive upward movement. This didn't happen because of the technical. This happened because of the ECB press conference was that day. And not just that. What happened is actually that most of the banks and most of the speculators expected the expanding expanding and increasing in QE program from 60 billions to more, maybe to 70 billions to 80 billions a month, you know, the quantitative easing program, but that didn't happen. And basically the ECB just extended the length to 6 months on of QE program. They didn't expand, they extended, and that's the why. And everyone expected both, so expansion and extension, and it happened just extension, which means that that was what the banks didn't expect, and they went off guard at this stage here, so they let the market to recover there, and then a lot of buyers, since of this, you know, they took advantage here. They bought a lot, you know, but we find again resistance around 1.1050 area, and that was so far that's the key resistance at this stage here. Okay, and I benefited from this, you know. I watched the correction and exactly bought at this stage here, and I took position here, you know, with a very tight stop loss, you know. And you have this on my Forex Factory thread, exactly time when I entered, you know. So I benefited from this news, you know, even though it's a strong downward pressure on the short midterm bias. I used advantage of this event, which is the key event, you know, and I benefited from this stage. And later on, I sold at this stage here, you know, and right now I don't have any position in EURUSD, you know, but I will erase here this one. But here we broke this trend line. Now we price retest that. So it's possible also to go to this, even to this. And if something not so good on the conference, we can even go here before we see the back lower. It's absolutely possible, even to this or this, you know. Why it's possible? Because if the stocks are still going lower, you know, and its conditions are not good, price can go to some larger, you know, larger corrective phase before we start the selling continuation. Okay, so we have the ABC here, you know. I placed the expansion from this ABC, and I got 61.8 here, exactly near the swing high. This is also possible area before we see, or also if there is a still stocks are going lower, they don't actually recover and stuff like that, price can go even there, you know, to 1.1250 area, and then start potentially to go lower. Okay, so that's about the USD. Again, everything is fundamental. You know, this upward movement directly have the impact on event, you know. It's directly because of the Draghi speech. It's directly because of the information that ECB didn't expand the QE program, they just extended. And this is the result. This upward moment, Later on, price find the supply here, but it's not enough. You know, everyone is scary because stocks are going lower, and you will not see any big banks or investor are selling the euro for example, because most of the analysts expecting 1.0500, but they didn't really have power even to go up below the 61.8 retracement. They didn't have power because of the stocks and conditions are not good, so price went higher, and it may still go even higher or flattening around this stage in this trading range before. So it can flatten this trading range before the ECB press conference this week. Okay, so this is why this is right now absolutely neutral and even slightly bullish because of the breakout and testing of the supply channel, but it's not tradable in the from professional view, you know, because we know from one side you're raising QE program, and we know that short midterm it's absolutely bearish, you know. From the other side we have strong dollar, that's good, but what we have, the previous ECB meeting was disappointment for many analysts and banks that didn't expand, and that is still active as long there is a new one, which will be in the few days, you know. And there is no one who wants to risk and establish some big selling positions in these current conditions, you know. And not just that, again, the stocks and futures are not in favor of the to weaker euro, because again, stocks are going lower. Generally, indexes are going lower, so that's the reason why the USD is a flat. You know, that fundamental view, you have some good and bad things here, create this indecision. That's why you see flat market. Okay, tell me if you have any question here. If you can you hear me or I spoke tell me, guys, do you hear me? Just write in the chat if you hear me. Guys, do you hear me? Okay. I told it, yeah. Okay. Okay, so this is pretty much about the euro right now situation. I will back here. As you see, we are very strong downward movement, you know. Not just that, we broke the daily. This is a potential distribution, but by Richard Wyckoff, since I'm using the yeah, okay, thank you. Since I'm using the Wyckoff analysis, you must know, yeah, one thing before I continue. It's if we speak about a technical analysis, okay, I can write you here what to focus on the technical analysis. I don't speak about right now fundamentally. Fundamentally, it's a big field. It's like, you know, universum. You know, you need to know to understand information. You need to know to benefit from that information. You know, and that is a big part of my mentorship program, 7 Days Course, which I absolutely advise you to start if you want to be professional and start serious analyzing the market. You know, I absolutely advise you my mentorship program, which I will speak to you more later on before I close the meeting. So if we speak about the technical analysis, pretty much the most important thing to analyze the intermarket coloration and to analyze to understand day by day what's happening and what's going on, you know, it's actually to analyze the volume. So I will write the volume analysis, since pretty much I'm doing the Wyckoff analysis combined with volume spread analysis, combined with, you know, with price action, so plus price action, let's say, on that way. That's the key principle for any analyst, any professional analyst who trade, who observe all markets, who do the intermarket analysis, and every professional is doing that. So it's pretty much that, you know, without the volume analysis, without knowledge of the understanding the volume, you will not be able to do the analysis on the stocks, on the indexes, on the futures, and the so on, since they are all centralized market. And if you don't know to use that information and to read the volume. Since volume is activity, if you know to read activity, you actually know where we are heading most of the time. And then you can correlate that with currencies and so on. So you must know volume analysis. Absolutely, this is my first technical principle. My key technical principle is actually volume analysis and volume price action analysis, which means YQF analysis, and volume spread analysis, which is very, very, very important in professional trading. Not so much on the Forex for itself, but watching the indexes, futures, and everything which is centralized, then you transfer that knowledge using the volume analysis transfer to the currencies. Again, on the currencies, from the other side, the volume is very limited because here we observe just spikes, like the climatic actions. Like here you see the green one. It's called the climax high or the buying climax. This is one of the phenomenon on the market when we have the strong widespread of the bar in an ultra high volume, and that's called the climatic actions or a buying climax, and this is a buying bullish bar. Climaxes are usually for the professional sellers to establish the selling positions later on if there is a fundamental confirmation of that. And for example, at this stage, after this buying climax, after the testing of this trend line, supply came in, the professional start to sell. Just one example. So in the volume on the Forex is basically the tick volume. Since the Forex is not centralized market, you cannot have evidence of the exact volume, traded volume per day, per minute, and it depends on the liquidity provider you get from the broker house. So it's not centralized, and you cannot observe that deep at all, like on the centralized market, like the stock market, on the futures market, But here, what is the good thing is you can actually observe the spikes, which can be used, like climatic actions, but basically the most important. It can be used, this was a massive buying climax here as well, after this news, and sellers came in, and this is good to use there. Again, buy climax forced some professional sellers to start. They sold here, they scale out here pretty much where I scale out, and right now we are neutral. We are waiting the ECB and so on and so on. So again, my key principle to do the intermarket analysis, and is volume analysis, YQF analysis plus price action, which I also teach on the mentorship program again, since my mentorship program covered the fundamental and technical aspect. If we speak again about technical analysis, the second thing is, so the first thing is volume analysis plus price action. So I will not write the price action for itself, since I included that in the first one, volume plus price action. Well, the second one is absolutely the formations. You probably know about all key formations right now, so it's not a big something miracle stuff like that. Here, about the classic formations, again, we have the double top, double bottom. We have the head and shoulder formation, which is the biggest formation for topping action. It was used many years before. It was used 100 years ago by traders. It's absolutely, right now, it's absolutely the same importance like 100 years ago. The key point, you can use the flags like bearish flag, bullish flag. You can use the triangles and so on. Everything, that's all good. Okay, that's all proven. That's all good. The point is, you need to know when to use and when not to use. And when to use when the fundamentals agree with that. So again, if you don't know fundamental view, you cannot, it doesn't matter if there is a big head and shoulders formation or not, because it will just not work, because there is no fundamental fuel, let's say. There is no power from fundamentals to move that. So you can have it doesn't matter what you have, which formation and how it looks like. If you don't have fundamental intermarket coloration in your favor, it's absolutely, you can still lose. It doesn't matter what formation you trade. It doesn't matter with what technique you trade. You absolutely will face a very hard time to earn on that way. So formations, again, double bottom, you can see here, it's key formations. Double bottom is here. This is a neckline. We went some higher. Then we use the, again, price action combined. There is a key cluster here. It's absolutely obvious. Everyone can see that. So the technical analysis pretty much during the volume analysis, no to Wyckoff analysis. Wyckoff analysis is very important because it's mostly focused on the anatomy of the trading range. This is also trading range, diagonal trading range. This is called the redistribution. This is on the daily time frame, so it can big potential to drop about 1,000 pips lower on the, let's say, some mid-long term perspective. But we must go step by step, day by day, and see how we progress, and so on and so on. And see that if the fundamentals confirm that, we can go very, very lower. And since we are in active QE program, and the chances for this distribution are very big. Okay, this redistribution. And, I will just write you some key points here. For example, from Wyckoff analysis and labeling, there is a selling climax which stopped the action on the EURUSD. This is a secondary test, ST, for example. This is the automatic rally here. This is again secondary test here. Here, this is an uptrust and ultra high volume, and at the same time it's a buying climax. And this is the, at this stage, last point of supply. Okay, this is the last point of supply, and this is probably the retest of the ice or of the support, because this support became resistance once it's broken again. It's a key rule in the price action, so it can be also retest of that. If we don't see, it can also again depend of the meeting of the ECB, depend what will happen there. If we see the higher price can even go to this area here and then continue lower, or to go to this, as like we spoke. So it's also a possible scenario, stage. But the point is, we are on the mid-long term absolutely bearish. We are in the redistribution. We broke the key trading range, and it's absolutely bearish. But again, it's not good time to establish now. So this is about the Wyckoff analysis and labeling. There is a lot of things there. I use also pointed figure chart to calculate how much we can go from this trading range. Every trading range have a different anatomy, different length, different size. For example, this size was from down to low. It's about 1,300 pips. The length was about 160 days before we broke. So it's a big redistribution, which can cause really, really strong downward moment if we see the confirmation and USD is doing good and US dollar strength, and also the QE program is active, so that can push a very, very low USD. Okay. So the point here is, again, first of all, you never want to fight the trend. Okay. So, for example, at this stage, we are in neutral on the USD, but even that you see some upward, it's a very, very to trade at this stage and do the upward, it's a very risky. Why? Again, because we are strongly bearish. In QE program is active and so on. This doesn't mean that I don't expect a higher price. we may expect even with more chance that we see some higher price before the lower price, but you will not buy, you know. This is a neutral, and the right thing to do is actually to wait the ECB to see the interest rate decision, to see what will going on, what the speech will be, and then later on start to establish positions and watch the futures and stocks to see how we perform there, you know. So there is no buying in the big downward trend. Okay. So that's about the EURUSD. Someone asked me about the GBP USD. We are here. Yeah, also, by the way, I will back here. You can also use, I'm using the multi-Fibonacci zones. So again, the important, in my analysis, I'm using the Wyckoff analysis, like main principle plus price action. So supply demand zones, clusters, you know. The second thing is I'm using the Fibonacci tool. I'm using the expansion and retracement tools, and I'm doing the Fibonacci, multi-Fibonacci analysis, which I'm covering in my mentorship program. Third thing, I use the patterns. If I recognize some pattern, you know, it's also good to have in mind that. And I'm also using fourth thing, I'm using the moving averages, the key moving average used by every professional. It's basically like 50, 100, 200. You can add 150. You can put even 21 for intraday. You can put like 10. All simple moving averages. Okay. They are very good because they absolutely presenting the average as like the indicators say. They are moving average, you know, for some period. Depend what you put, 50 days back, you know, or 100 and 200. Okay. So again, you see the price is below all key moving averages. It's fighting right now on 4 hour. It's very flat. You know, you can see that also here. It's very flat on the 1 hour. So even on the averages are flat. And suggesting here this is a flat market. You know. Also, by the way, we rejected from this area where we got a lot of moving averages here, and you see how the price very well. 320 pips went from that point on the daily. Rejected from 200, 150, and 100 on the daily. This stage here. Yeah, you see on the weekly time frame we are very close to 50. Here to 50 simple average here. So 30 minutes. This is a flat. You know, this is a flat on lower time frames. Okay. How you use the averages? You use like support resistance. You use to see the slope, where is the slope heading. You use the golden ratio, the golden cross, pardon. So when the 50 breaks the 100 or 150, it's a good sign that something changing, you know, from upward to downward. What you can also use is standard stochastic tool. It can be also used like additional standard stochastic tool. It's good oscillator to have on the chart if you want to see what's going on. For example, look at the 4 hour for EURUSD. It's actually on the 20 here. Trying to pick up 20 here. So let's say on that way, using the stochastic, it's oversold on the oscillator. It's oversold on the 4 hour. 1 hour, it's starting to heading from the 20. So on the shorter frames, we see the oscillator going from 20 to trying to back up here. You know, from the other on the intra frames, we are lower. So again, this is exactly what represents the sideways. You know, you have the 30 minutes, 15 minutes heading lower stochastic. You have the 1-4 preparing for upward side. From the other side, you have the broken channel. You know, fighting here from the, you know, and also the moving averages are flat. So basically, this is a pure flat, fundamental and technical. It's flat. So what do you think about stochastic 1433? You can use also, You can use that one. You can use even 3 different settings on the stochastic, but again, it's only used like additional thing to check where the oscillators, you know, to maybe filter some better timing for entry, better timing for exit. It's also used by professionals. I'm not using always that, but I always want to check that, to see how it's heading, you know. And then I usually delete that because it's confusing me, you know. So I just check to see where we are there, you know. So again, from technical analysis, pretty much you focus on that. Okay, we go, for example, pound USD. Someone asked pound USD. We are in the key support, actually price respect key support from 2010 February, I think here. Actually 2000, it's a 5th month, yeah. From this stage here, we have the key swing low here, from where the price, by the way, went almost 3,000 pips, and price respected that. We saw that. We see the rejection at this stage, as you see. This is a rejection around 1.4240, which was actually my prediction on the GBPUSD, and we met that level. Right now, what to expect? Again, pound is in British economy is in big trouble. They want to hike the rate. Last year, they didn't have enough health in the economy to hike the rate. So, because of that, lack of the health in the UK economy, and because of the bad datas and bad releases, you know, the economy is not good, and that's why pound dropped. Pound is very weak. Look at the daily, how much price is below all averages, even the fastest, which is the 10 simple moving average. So very, very strong downward pressure, and buying here, it's like playing with the fire. As long there is no improvements on the health in the economy in the UK, and there is no, you know, some significant improvements in the economy, the GBP will not go any much higher. It will just go to do some correction and then continue downward pressure. So, you know, again, I don't speak about the scalping or stuff like that, but even if you do like ultra scalping, which I not advise you to do scalping at all, because you fight with the fire pretty much, because you want to benefit as fast you can, that can cost you also to lose as fast you can. So you must know that in the Forex, on the Forex, the risk is more important thing. It's much more important than the profit, because the profit will come with controlling the risk and do properly scaling the position. But if you have the greed and you pay attention on the profit much more than on the risk, you can have the big troubles. That greed can lead you to lose the money, to lose the account, and slowly, totally lose the whole account, because you don't have the proper knowledge even, and you trade the greedy. So it's not the way. You must know that in professional world, and for example, what is goal? My goal yearly is always to create the account and to trade, to have the stable year, which means 5 to 10% maximum drawdown during the year and 30 to 50% return yearly. And I absolutely achieved that. I achieved that last year. I'm achieving right now this year. I'm in plus about 3.6%. I have some active positions, which I will show you in the New Zealand and Australian dollar, which can bring me a profit. Depend. Can we go lower or not? But I secure the break even, so I can finish even. You know, with these two setups, I can earn maybe even 3-4%, and you know, 3% a month. It's about 36% yearly. And that's pretty much with the drawdown. Even I have the drawdown right now 0.6%, 1.6%. That's my maximum drawdown right now. So my actually goal is to have the max drawdown around 5%, maximum to the 10%. That is our maximum. First of all, any large investor you must know, will not give you any big amount of money to trade on if you don't have a very controlled statement and account, very controlled trading and proper result. So even if you have 20% yearly, but you don't go over 5% on the drawdown, it's still very good, you know. And everyone will give you, you know, big amount of money if you're able to do this. Okay, and if you have consistent results and so on and so on. So again, this is some reality. If you want to trade professionally, you cannot risk 2% per position on the short-term positions or intraday. That's ridiculous. It's from the start very unprofessional. You know, to lose like from 2 setups 5%, it's absolutely ridiculous in the professional world. You know, it's totally like suicide. That's the first thing I want to tell you. So because I see a lot of people, you know, trading, risking 2%, somewhere 3% on the intra BS, which is absolutely insane, you know. So it doesn't matter what account you have. You have 1K, 10K, 1 million, 100K dollars. It doesn't matter. You must treat your account on the professional way and trade professional risk control. It doesn't matter which account, how big size. You can have $500 on the account, but you must know that you must expect 30-50% yearly if you, of course, have the knowledge to do that, because you need to have the big knowledge even to do that. You know, that's like absolutely miracle if you can do that. You're very experienced, and you know, to have the low drawdown and still very good returns. You know, that's the dream in this business. You know, that's absolutely dream. I opened actually some demo. I want to show you on. I opened it from a month and a half ago. Right now I have some positions here. I attached this account to Forex Factory, you know, so you can follow my work there and see the drawdowns and everything, you know, pretty much. So I'm risking 0.5 in. I start with 100K, this balance, and again, I'm progressing this one with drawdown maximum this moment 1.6. So I don't expect that I go over 5% this year. You know, I have very controlled risk, you know, and I don't expect really to go above even 5%. So, but maximum is 10. Even though above 10 I will not go for sure. Around 5 probably, you know, but I would like to still be even below the 5 and still have return about 30% yearly, which is absolutely amazing. That's what you want to achieve, you know. For you, like trader, I speak this on the professional way. The maximum you can do for yourself is to put the 1% risk and define your maximum drawdown to 10%, which means that you cannot have the 10 setups in a row negative. Okay, so because that is if you do personally for yourself, you know, that's the maximum risk I advise to anyone. And even though this risk I advise just for the just when you have the strong experience and you understand the market, not before that. Okay, so that's the maximum. And of course, this is a maximum for the short-term trading, not for the intraday, not for the scalping or stuff like that. Okay, so it's a 1% per position on the short term when you have, if you have the good knowledge and experience. And the GBPUSD again, due to strong downward pressure, it's absolutely vulnerable. You know, any supply which came in a dollar, any strong dollar will push strong this GBPUSD. You know, this can lead to absolutely further even drop. If the price breaks 1.4 235 area, we may really see even 1.3 670 area, which is about 500 pips below this current price. That's about some short midterm perspective. Depend of what will happen on the interest rate decision, the news. They actually didn't change the interest rate. It's still unchanged. They didn't hike, so it's still a sign that economy is not good, and the indicators of the economy are not good as well. The trend is technically very strongly downward, and fundamentally is also downward, so GBP is very weak. And betting against the GBP after some technical correction upward, it's a good deal. That's about the GBPUSD. I have positions on the New Zealand dollar, US dollar. Okay, so here I secure position at this stage here. I established it here positions. Okay, but right now I'm about 40 pips in plus. Price went to the correction here. We got China release some. From the Asia session, we got some news, because China is the biggest partner of the New Zealand, China is not did bad here in this news on Asia session, and that moved actually New Zealand stronger together with Australian dollar. So my positions again, I was in plus about 150 on this one, but risk was about 70 pips, so about 1-to-2 ratio. I was on the Australian dollar, and I didn't close because I saw more space to go lower. Price broke strongly lower here, but right now we are in upward correction due to again the Asian session China report, which is still in the play. We'll see how much they have power to move the higher days, but I still anyway expect weaker Australian and weaker New Zealand dollar next period. Also in the New Zealand there is auction right now, dairy price. We'll see how much the milk will go. The last auction was negative for the milk. It dropped to 4.4%. If I think the milk went lower, which is not good for New Zealand. But if this auction also will be bad when it's released during today, it can be also another potential push lower if it's bad, if the dairy price is going lower. On the 1 hour we are testing 150 on the New Zealand. On the 4 hour we are close to 50. Daily time frame pretty much we are about to test 10 simple moving average. We break pretty much the strong again redistribution. Okay, this is a redistribution on the daily time frame, so it's technically selling are favorable. What happened here is that actually price respected the swing low here from this double top, and this is, let's say this is a next swing low, and price went lower and then back here upward and closed here, which is some temporary demand came in. It doesn't mean that we will reverse or something like that, but it means that temporarily we can see upward, and we saw that. Okay, and price corrected from that point about 100 pips. My final target for this one was at this stage here, near the swing low, near the cluster here, and I want to grab this 1-to-3 ratio to 130 pips, since risk was about 70 pips, 75 pips on this setup. Okay, now I'm in plus only 40 pips on both of these setups, but anyway, I put here and I see how the price progress, and you still have chance to back up, to reject. There is 150 here, 200 is here. We are right now testing even though swing high. So we have also this swing high and this swing low as well, like strong resistance. So There is some resistance we need to break down, and I will be stop loss on the break even here. But even though I can again sell here if I see the price find very hard time to go higher, I can resell again later on after I see the dairy price, how we went from the auction. If I see that I got stop loss and break even. That's about New Zealand and my positions. Again, I established position because of the strong distribution, you know, and price went this. That's 100% expansion, also the swing low, and I start to sell at this stage here. So we'll see. Let's see. I have the question. What I can say swap can be a problem going to long position. Long. You think about New Zealand? Long? New Zealand US dollar? Any? Yeah. Yeah, I'm not looking for longs, so you don't need to look for longs at all. Because even the EURUSD, the GBP/USD, the New Zealand, Australian dollar, all those pairs, you don't look to buy anything of this. You just wait a good opportunity to try to establish a selling position. You know, when conditions are there. Okay, when conditions are met, fundamental conditions, then you can trade. Yeah, it's a very risky to do anything to try to buy to fight the trend. You never want to fight the trend. You never want to fight the fundamental and technical trend together. So yeah, this is Australian dollar. Australian dollar doing the correction here again because the China report, it was not so bad for China, and the result is, as you see from that report, about 85 pips upward. We'll see, can we go to this area? What we can do is place the Fibonacci to see the major one. You know, see, so we have some resistance to break, you know. We have some resistance to break, and we'll see how we'll progress till, you know. But I will see, as this is still very, very bearish. So even though the price go and did the stop loss and break even, or trying to go like here, I can we can also place expansion there, see how we can go from this correction. You see what's possible. It's possible even if there is a strength. Now we are testing 100% expansion, but you see that even we go higher, we can even go to test the swing high before we go lower. So if I got stop loss and break even, I will also again look for seller on this stage here. If again conditions are good, fundamental conditions are good. So yeah, but also we can reject from this stage here and go lower. It's also a possible scenario. This is also swing low here, this stage and this stage here. So it's 50% retracement from this swing high to the swing low. So it's also quite good resistance. It's 150 average on the 1 hour. But again, we see what will happen. So that's about Australian. So you have the Euro, you have the USD CAD. This is amazing reaccumulation by Vykov. How we reaccumulated this one at this stage here. This was a reaccumulation of 5 days. Price went. This is a sign of strength. The last point of support, and price went from that point about almost 700 pips. And if I tell you that risk was about 80 pips at this stage here, you see how much this is amazing. You know, and this is why this. It's not because technically Yeah, we went, but I can also show you a lot of examples when this kind of only technical didn't work. But when you have the from other side oil dropping like this, you know, and Canada is the very, very related to the oil, and we know that USD is strong, US economy, they hike the rate and so on and so on. So it's absolutely, this is how you benefit from that. You can absolutely buy here, take the 1.3, 1.4, 1.5 ratio even. You can rebuy with a smaller amount. You can rebuy here. Absolutely. You know, you can rebuy here after the breakout of this smaller trading range and so on and so on. You see the moving averages, how they're strong. You know, this is right now again correction. So again, you can go. We are testing 100% here. Probably price can even reach this. Probably, we don't know that, but it's also a possible scenario before we continue with higher prices. You see how very, very, very strongly we go. We're going upward. Okay, it's at 230 minutes, very close. So yeah, USD CAD. As long there is a oil going lower and there is no indications that oil will recover and stuff like that, the Canadian dollar. There is also, I think tomorrow, there is an interest rate decision in the Canada, so don't trade the Canadian dollar right now. By the way, now you should trade days before and establish here buying positions, that's for sure, and benefit from this one. But right now it's not a good time. Wait the interest rate decision. They probably they cut the rate, cutting the rate with also going to further weakening Canadian dollar. They probably cut because, you know, they need to cut because these oil conditions. Oil is very low, so probably they will cut with 25 base points interest rate. So wait for that. From that point, we'll see what will happen and how we progress, and you know what will be the speech on the meeting and so on. So again, this movement is, and this Wyckoff analysis and everything you can use here worked because the fundamental conditions met. Okay, and this is just one. This is about the basics I spoke today, by the way. So there is a lot of work to do when you want to establish the positions. You must know to first of all, technically, you need to know to read the volume, to see the how we use the volume and price section, how we identify supply demand, how we read that activity. You know, you need to know intermarket relations, what the inflationary environment is on the market, what's the deflation environment, how we have the coloration in the inflation environment, how we in deflation environment. You know, what is coloration in the inflationary, what is in deflationary, how the interest rates affect, how the other events affect the currency. Okay, so there is a lot that you need to observe the futures market. You need to know where big options, how we use the options on the daily basis, you know, and the expiration dates. You need to see pretty much, you know, the commodities, how they perform, what is the key exports for the countries, how, you know, what is the trade balance for the country, is it in, you know, so, you know, import, export, everything taking the part of the global, you know, movement on the currencies. You must know that. Again, technical analysis, it's important, like 50%, and 50% is fundamental. Even though the technical analysis, you need to know the right things on the technical. If you don't know the volume analysis, very, very deeply volume analysis, you know, volume spread and Wyckoff together, you will not observe, you cannot observe the stocks and futures and so on, which are very, very key parts as well to the currencies, you know. So you need to know that. You need to know how to use the multi-Fibonacci zones. You know, I just show you these some basic examples. You need to know. You need to know what is agreement, what is, you know, other things. You need to know resources where you will go daily and see, you know, expectations from the banks. You see the, you know, you need to know how to every event, how it's reflecting on the currencies. If even though sometimes if it's positive, how then going lower if it's positive, you know, or how it's reflecting negatively, you know. You need to know when it's reflecting positive, when it's reflecting negative, you know, and so on and so on. So you need to read, you need to know to read the speeches, to see the key sentences on the speeches and stuff like that, you know. So it's a very, very big thing. It's a serious business again. I wanted to show you just some key parts here, something which influence, you know, the market. You see how big is influence. It's a very, very big, you know. So again, it's just a classic example, going to EURUSD and see, you know, the quantitative easing program when it started, how the EURUSD went very, very strong. Okay. So quantitative easing program, it's absolutely, you know, and everything is going because of that. You must know that it's not this downward movement here. It's not started because of, you know, anything technical or moving average or something like that. It's because of the quantitative easing program, you know. And not just that, it can even go lower, very, very lower, if conditions are still the same, and will be the same, you know, at least for a 1 year, we will be in the quantitative easing program. So you can only expect lower 1,000, 2,000 pips this year. And because we're expecting dollar also and US to hike the rates, so a few times during this year, which means very, very stronger dollar as well. Okay. Also, commodities, how commodities affect. I told you just, you know, commodities. You know, there is a lot of commodities, copper, gold, you know, oil and everything, you know, silver, how they affect agriculture as well. So a lot of things affecting different currencies, affecting the dollar. We know the relation between the gold and dollar. Here's the index. When commodities are going are weak, the dollar is strong. When gold is weak, we know that Australian is weak and stuff like that. You know, then you watch auctions for if you want to trade in New Zealand dollar, you must know to read the auction and stuff like that. And it's a very big field, and you need to do that on the daily basis, you know, and follow, see how economy fluctuates, and later on build on that if you see any opportunity, any good conditions. Okay, that's it for this webinar. So I hope you liked. I'm recording this webinar, so this will be recorded. And if you have any questions, I will let you 5 minutes. Yeah, Marco. Yeah, Marco. Yeah, you're welcome. You're welcome. If you have any questions, guys, you can, first of all, my advice for you is like this. If you really want to be the full-time trader and start a professional career, let's say in that way, my advice is to start my mentorship program really. because I absolutely teach you everything I'm doing on the daily basis and how I'm doing and how most of the professionals are doing. You know, I absolutely teach you from the technical view. We're going deeply to volume analysis, to the volume spread analysis to see that about the climatic actions, how they reflect, and so on and so on, about the multi-Fibonacci zones and so on. When we use the global formations like hand and shoulder formation, flags, and so on. Pure price action, that's about technical, and then fundamental part, it's about, so we work like three days technical analysis I'm teaching you, and then we work like about 4 days we work fundamental aspect, you know, and intermarket and analysis, and also the event analysis. I mean, events like GDP, unemployment, and the key high impact events you have also on them scheduled on the Forex Factory, you know, regularly, and how we read them and what's important, what's not important. Okay. So that intermarket declaration and this fundamental view combined with this, actually, it's something which is professional point of professional view, you know. You also watch, there is a lot of things when you do intermarket analysis. Again, there is a speculators positions you need to watch also, COT reports and stuff like that, you know. So it's a big field, and you need to use this knowledge, because all these pieces help you to find the right the final decision and to establish the positions. Okay, it's a very strong area. Contact info, yeah, I will write you contact info. My advice, because why I'm telling you this, it's not because it's some my programmers types like that. It's because of you can lose years, believe me, because I did lost about 2 years, you know, 2 years and a half probably. I lost trying to find something like miracle, trying to learn from websites and stuff like that and stuff like that and stuff like that. But what's actually reality is the one man actually professional trader who trade for the banks explain me actually what's the majority, what drives the market, and how the banks have the influence and everything about the fundamental aspect. So later on, after that, when I started to do that, you know, and getting a lot of experience in that, and worked on that and worked on that, I already at that time got the big technical knowledge. That wasn't a problem about technical knowledge. It was a problem about reading the fundamentals, which I then understood completely. And yeah, I'm also market economist. Yeah, I will write you. This is my Skype username. Okay. This is my Skype username, petar.jacimovic. I will explain you a little bit. So, why I'm taking this mentorship program cover everything. Not just that I'm in touch with you after the program. I follow your work. We trade together. We are in touch. We can start any corporation. I can even hold. I can come to your country and hold a seminar, live seminar to people. We can start some to manage. If you have some investor, we can manage together. Money, I can help you in that as well. There is a plenty of things, but first of all, you need to learn to do the professional and analyze the market, you know, day by day, and see what is that daily routine. You go to the to see the informations, to gather informations for the day. You see the schedule, the interest rate decision, the bank decision. You go to futures. You open this. I have the 6 monitors, 6 monitors in front of me, and every monitor is for, you know, for purpose. On one I have futures. On second I have, you know, options expiration dates. On the third I have the indexes and stuff like that and so on, you know. And on my key here I have like working monitor, you know. So again, what it will cover. So my mentorship program, for anyone who's interested, I'm able to do that. I have the time till end of the January. I have time to do the mentorship program. Mentorship program is about 7 days free, 7 days course. We working about 4 hours per day usually. 4 hours per day. We go to TeamViewer. You see my screen. We speak. You know everything. We go step by step. I send you some books as well to read later on for yourself. We're going with technical analysis, volume analysis, you know, key principles, what is the Wyckoff analysis, why it's important, how to identify the trading range, how to calculate the projection of the trading ranges using the point figure charts. So again, every base, every trading range have the different length, different size, and that's will reflect on that effect from that range. So we have the cause and effect, like a key low. Every cause have the effect, and every cause is a different, have a different effect. So we're going through that 3 days, you know. Then we start with the fundamental analysis and step by step going to the every market and how we are correlated with currencies as well. And every currency is a story for itself. Every bank, every central bank, is a story for itself for the major central banks. Yeah, price for this program, 7 days course plus my full support after, it's 1,000 euros, including everything in this price. So 7 days course, 4 hours per day, full my support after program, and potential to build larger corporation later on. I'm on the Skype pretty much from London open till London close. Every day I observe and find if I see the good opportunities, you know, I establish positions and so on and so on. So again, and that is the price. It's absolutely minimum for what you will learn, because I will teach you something for the life, again, which I'm doing about 5 years, you know. So you don't need anything else absolutely to watch after you finish my program. You just work and practice on that knowledge you get from me, and we together with me, I doing the full support to you later on and help you to progress faster and you know, and become in that professional field faster, become a professional trader, let's say on that way. And again, we can be in the touch in the Skype after program every time. We can even be in the conference call every day, because that's my regular job. Again, I already 5 years work for Forex company, like official analyst. I work also I work for FX Street and so on and so on. Okay, so absolutely full program. 1,000 euros is the minimum price to cover my time, and you know, it's absolutely ridiculously low price for this one. What you will learn, you know, because I see some mentors teach you just candle formations or teach you, for example, GAN analysis and take you 5 to 10K for that, you know, just from one aspect of the technical analysis, you know. And I teach you technical analysis, what's the most important to, and you don't need anything else. And I teach you the intermarket relation and fundamental analysis together, you know. So it's price is ridiculously low compared to what you will learn basically, and you will learn absolutely everything you need for your professional career. So you can add me on the Skype. We can talk about, we can arrange the date when we start. Okay, so we can arrange the date when we start the program, and I hope we start a corporation, and then together we trade later on and create success. I'm already doing that, so everyone who wants to join my success and, you know, wants to join my, let's say, team, you know, are welcome, and I'm happy to cooperate. But that's it for this webinar. I hope you enjoyed, and we talk on the Skype. And also, yeah, for the very end, follow. I will send you the link of my Forex Factory thread. So yeah, you can also check about you can check this thread about. You can write a comment about the webinar if you want. If you like the webinar, you can write your analysis there. We have discussion there, so pretty much visit there. And if you like my work, and if you know, so that's it. Hope we start a cooperation, and see you soon. Bye bye.